Hey everyone, welcome back to this YouTube channel. If you haven't already subscribed, definitely hit that subscriber button. What we're going to talk about today is the fundamental analysis for both Euro futures and the dollar futures, and where this pair could be heading based on fundamentals alone. We won't get into too much into technicals, but let's discuss what's happened so far, and I'm going to show you some documentation to back the analysis so you guys can kind of see where I'm getting my information from. So right off the bat, the first thing I want to mention is this was the Fed not deciding to raise rates. It gave the euro dollar extra strength. Price continued on bullish. In here, the European bank basically said what Lagarde said in her last meeting is that they don't have any rate cuts in sight. They're expecting inflation to be higher in 2024. So with that being said, the probabilities of the European bank cutting interest rates are quite a bit lower than the US bank. What happened here during the FOMC press conference is Powell was kind of giving a sentiment that they don't want to raise anymore, and if anything, 2024 could have a higher probability of rate cuts. A lot of investors actually priced that in as they expect a very aggressive rate cuts in 2024. This even came from some of the bank reports. So aggressive rate cuts from the US dollar are expected. You can kind of see price kept on rising. Right before the end of the year, price sold off here. This is expected. This happens every quarter where the institutions take their profits. This increases their balance sheets so they can get more investors for the following quarter. So this is all in line. It's in line with a lot of the technicals too. For those of you that trade support and resistance, this is a zone for you guys. Obviously, from a technical perspective, you expected a reaction. The supply and demand guys, same thing. We have a supply. Again, you expected a reaction. And for us liquidity guys, we have our liquidity. So it doesn't really matter what system you trade from a technical perspective. We expected a reaction there. The timing from the end of the year with institutional profit taking lined up perfect. So this was a expected reaction. Now for those of you that do follow me on Instagram, I believe it was on Tuesday, we were talking about how retail started buying EURUSD already. By the way, this DXY chart is inverted, so it's easier to compare to the EURUSD. And what I said to you guys was there was a good probability DXY will continue down and fill the daily gap, which we finally got today, which is where we got our reaction from today. So, where does this put us fundamentally, and what do we expect next? So first off, let's do a quick recap of what news have been released this week. And then I'm going to tell you guys what we have so far and what the expectation is. So, the Fed uses several indicators to make their decisions if they want to raise interest rates or not. One of the things the Fed cares about is employment, and the next thing is obviously inflation. The Fed wants to get inflation below 2%. Now, right now, the last FOMC meeting, the Fed said that maybe we raised too aggressively too quick and we just need to wait, and maybe the effects are just going to take longer for us to see. So for this to happen, we need a few things to happen. So you can see right off the bat here, ADP employment came out a lot higher than expected. So that actually is not a good sign for as far as the Fed's policy. If the Fed's policy is working effectively, what's going to happen is there's going to be less jobs, unemployment's going to climb, Yes, you heard that right. The Fed is essentially needing unemployment to get higher in order to bring inflation down. It's just how it works. It's the unfortunate effects of them raising interest rates. And I'm going to get into that in a second and explain that. Today we had NFP. So right now, what the market is waiting on was two things. The first, we wanted to see NFP and unemployment. The second is next week on Thursday, we have CPI, and that's going to give us our directional bias for the next month. Non-farm came out better than expected for the US dollar. Again, this is telling us that the economy is not weakening. The next thing to look at is the unemployment rate here. The unemployment rate should actually be going up, as in more people are losing their jobs. And it's not. So this right now is against the aggressive rate cuts that was expected in December. And just so you guys can see, Forex Factory did give us very similar numbers, so it's not just investing.com. Why does the Fed want to see lower unemployment numbers, and how does that work? Essentially, it's not actually the Fed trying to make people unemployed. They are raising interest rates. What that means is it's more expensive for companies to grow. Companies use debt to expand and grow. So when companies are borrowing less money, it means people are borrowing less money. It means everyone's spending less money. So when that happens, unemployment naturally goes up. So you've seen the heavy layoffs in the tech sector, I should say. That's very common. That is what we're expecting. So everything today basically came out saying that rate cuts are unlikely as of right now unless CPI changes that drastically. I'm going to get into the Euro futures in a second. I want to show you guys something here. So this is a document from Credit Agricole. You guys could see it was released 2 days ago. And what you could see here is the unwinding of investors' aggressive Fed rate cut expectations has helped the USD recover. So basically it's saying the investors are now losing faith in the Fed cutting rates as early as they thought. So that could mean one of two things. One, we could see lower prices yet on Euro USD, depending how CPI comes out, or CPI might not give us a direction, and this may cause a consolidating market condition until we get more economical data. And the next ones after that would be the interest rates from the ECB and the Fed itself. So this is right from an institution. They released another one today and basically said the exact same thing all over. And they said people basically thought the aggressive rate cuts were happening. It was priced in, and now the market's not sure if it's still happening. Now I'm going to show you something else. So we're going to go look at the COT, and what we're going to do is we're going to look at the asset managers. This is your big hedge funds, your pension funds. These are the guys that are actually moving the markets. So you can see their positions on the Euro futures are long. You can see the US futures are actually also long, but what I want you to notice is the difference in volume. There is literally 100 more times more volume in the Euro futures, definitely giving us a lot of institutional bullish strength. So these are the asset managers. These are the 1 to 5 year outlooks. This is your weekly and monthly time frame telling you Euro USD is going to be bullish for quite some time, unless something drastically changes. The next thing I'm going to show you is the leverage funds. These are the smaller hedge funds. And this is essentially a 3 to 12 month outlook. It doesn't really give us a lot. What it does tell us, even these institutions are more long positions on the Euro futures than short. If you combine these positions with our institutionals data that I just showed you, basically everything's leading towards we're long-term long on EURUSD. From this point, there's going to be one other thing we're waiting on, which is going to be CPI, which is on Thursday next week. Once that gets released, I'm going to do another recap on what's to come based on the data released. So right now, our expectation is basically not to expect rate cuts as of today's data. We'll see what CPI brings, and essentially, unless unemployment starts rising and inflation starts coming down, there could be another rate hike that's possible for the Fed. They haven't said that yet. As of right now, I would say the higher probability would be a pause. So a pause is still not a rate cut. And depending what the ECB does, that will definitely impact us as well. The CPI from the European standpoint came out a tiny bit lower, not drastically, so not enough to make a difference. Again, more data is needed. So with that being said, our expectation right now is essentially to wait for CPI. This could do one of two things. We could see lower prices, we could see a sideways market, and unless CPI comes out with some kind of data that really tells us what the Fed's more likely to do, it could definitely lead to some consolidation. And with that being said, long term, at some point here, we will eventually realign and we will eventually be looking for buys again. This is coming from the institutional positions based on COT, which is available on Prime Market Terminal, which is the app I use, or you can just find it on Google, I believe. It's public knowledge. It's not anything special. But with this in mind, we are long-term bullish. In the near term, we have to wait for CPI. So I hope this made some sense to you guys as to what we're looking at, what we're expecting, and why. I believe even retail wasn't really sure what to do today. So they were kind of a 50-50 split on the retail side of things. Usually retail is going the wrong direction, I would say 70 or 80% of the time. But today I think retail was a bit confused as well. And all that is essentially we're waiting for the market to show us its hands. So everything about today made sense. We reacted from the gap. We reacted from a level of liquidity. These were expected reactions. Hopefully some of you caught the buys on Euro. I'm coming back to trading myself on Monday. So we'll be back to doing some recaps for you guys. But you can kind of see this was our DXY gap tap. Price bought up after that. We took out a level of daily liquidity. Price sold off. Basically, this is right now it's looking like a consolidating market, which could be the case for the next 3 or 4 days until CPI comes out. So definitely keep your trades a little bit shorter right now. Keep your risk managed. I wouldn't be trying to hold your positions for too long until we get that CPI data. I believe once that data comes out, that'll tell us if we are moving into a consolidating market or a trending market based on the data. So yeah, I will see you guys in the next fundamental update. I hope this sheds some light for some of you, and I hope you have a great rest of your day. Bye now.